Changing up the scenery a little bit today instead of my normal backdrop. So I wanted to talk to you guys about how to really shop for what loan to get. No matter what lender you're working with, they should be showing you a par sheet. I'll go ahead and edit a par sheet into this video. That way you can see where it is. And what you're gonna see is everything that's like, let's say that par today is 6.25, right? And funny that I say par, I'm out here at the driving range, right? And it just came to mind that I need to make this video because people are not shopping for this lending correctly. So let's say today is that right now I did my application, my credit score is what it is, my income and debts are what they are, and the loan officer comes back to me and says, hey, you were approved for 6%. And I go to the other lender and I'm like, hey, where am I approved? And he says 6.25. Well, that's not the end of the pricing, because the guy that showed you the 6%, he's working on the same market as the guy that showed you the 6.25. The guy that showed you the 6.25 probably shared the par rate. The par rate means that the bank's not going to pay you to take that interest rate, but you also don't have to pay them. Too many times, especially today, because there's about 60%, 65% maybe of the transactions available that these lenders and us realtors are used to. The lender's way of competing is to give you that 6%, but not tell you how much it's costing. And even though the law tells them that they have to tell you at a certain time and in a certain way, it's buried in there somehow, some way, that all you really have to do is say, hey, look, lender, I hear you at 6% or I hear you at 6.25, but can I see the par rate? Can I see the par sheet? Can I see the pricing, right? They're gonna be a little hesitant. They're gonna tell you, oh, I'm not allowed to do that. If they tell you I'm not allowed to do that, what that means to me and what I would tell you to do as your realtor is don't do business with that realtor, with that lender. You don't want to do business with a lender that won't show you his pricing, right? So let me talk about what the par sheet is. 6.25 is par. Let's say that if you take a 6.375, which would be up by 1/8 of a point, or a 6.5 by a quarter point, heck, as far as 6.75 would be even more pay. The bank will pay you towards your closing costs a certain percentage of your loan amount. The reason they're doing this is because they're projecting that over this course of time, they're going to make more money from you. And over that course of time, they're going to make more money from you. Because what happens when you take that 6.5 instead of the 6.25, you have a bigger payment, right? But they're writing you a 360-month loan. If you don't wreck your credit, you can refinance that loan to a lower interest rate when interest rates are lower. When you're using a VA loan, it's a VA IRRRL, interest rate reduction refinance loan. IRRRL, VA IRRRL. You'll hear that a lot. In order to qualify for a VA IRRRL, one of the qualifiers, and it's a standalone qualifier, is you're reducing interest rate by 0.5% or less, or more, I mean. So if you take the 6.75 and interest rates stay the same, make your first 6 payments, which takes about 7 to 8 months because you get that first of the month off, right? We can talk about that later. The 0.5% is already built in for the IRRRL. So what you can do is do the math and say, hey, if I take a 6.75, what's my payment going to be? And they're going to tell you. Let's just pretend that that's $300 more a month. You're going to times that by making your first 6 payments, which is $1,800. If they're going to give you more than $1,800 in closing cost assistance, which a 0.5% should pay you quite a bit, you can get your closing costs either covered or help you with your closing costs. And then if you got a badass realtor like me, he'll have already negotiated in this market some closing cost assistance with the seller. What the sellers don't know and what they're not catching, because their listing agents don't know to look for it, is that I'm putting in there that the credits that I'm getting from the seller can be used towards the buyer's closing costs and or debts. So here's the deal. If you're qualified to 800,000, but you found a house for 550 or 600 that you really like, that means you can take a higher interest rate because you're qualified for a higher payment. So let's do the math with the lender that's showing us their pricing so that we can strategize how to get all of your closing costs covered and maybe even some of your debts paid off. Using this strategy, I paid off $17,000 worth of debt for one buyer. Normally it's around $5,000 to $10,000 worth of debt. And then after they make 6 payments, they'll see what the interest rates are. As long as they're going to go down by a 0.5% or more, they can refinance with the IRRRL. If you have VA disability, that IRRRL is nearly free. And I say nearly free because there still is some clerical work. But I have a trifecta move that you only have to do 2 things in order to get a lower interest rate, a lower payment, and a lower owed amount in your refinance on your IRRRL. I'll make a video about that later, but maybe I won't make it. Maybe I don't want to share it with everybody. I don't know. We'll figure it out. So I just wanted to talk to you about that. Hopefully you were able to kind of conceptualize and see that where we'll come back to where one guy told you 6, the other guy told you 6 1/4, but you took 6 3/4 with the guy that showed you the 6 1/4 because he was being honest. The guy that showed you the 6, he wanted you to bring another $6, $8, $10, $12,000 to closing in order to buy that 0.5%. Why in the world would anybody buy down their interest rate when the president of the United States is pushing Jerome Powell, the chair of the Feds, to lower interest rates? So either Jerome Powell is going to do it, or his replacement in May, who is appointed by the president of the United States, by the way. So his new appointment in May of next year will do what he says because he appointed him and he probably promised it to him, right? So let's be smart right now. And by the way, right now is a wonderful time to go out and be a buyer. The sellers love seeing you. They're making concessions. They're selling their houses with $100,000 worth of equity in them. You hear what I said? You could be that dumb buyer, according to Instagram, and make $100,000 doing it. So let's be smart about it. If you guys have any questions that you want to explain or you want me to explain, if you have a certain situation going on and you want me to explain, just make sure that you're not in contract with another real estate agent. Or if that real estate agent that you are in contract with is one that I put you in touch with, then we can talk. If you're not in contract with any real estate agents, we can talk. So the only time we can't talk is if I would be interfering with a contract that you have with another real estate agent. Said real estate agent probably put you in touch with the guy that told you he could get 6, shied you away from the guy that was being honest. How messed up is that, right? But hey, I guess everybody has to stay in business somehow, some way. I'd just rather stay in business helping you instead of screwing you. So let's get at it. See you on the next one.